Welcome to Fuqua's LinkedIn series, LinkedIn Live series, which occurs every Wednesday here at 12:30. I'm Professor Christine Mormon, and I'm a faculty member in the marketing area here at the Fuqua School of Business at Duke University. Today, I'm very pleased to have an opportunity to present to you some of the results of the most recent CMO survey that we call the Transformation of Marketing, and we'll look at some of the emerging digital, social, and political trends that we observed in the survey. I want to welcome all of our students and alumni who are participating today, and let's go ahead and get started. Okay, so as I mentioned, we looked at some of the trends that really have shaped marketing over this pandemic year, and just to sort of put this all in perspective, the results of this survey, which is the 26th edition, and we've been doing this since 2008, are based on 356 participants, and you can see the spectrum of industries that they're involved in. We also have, of course, firms of lots of different sizes, and that vary in a number of other ways. So let me just tell you that if you're interested in one of these sectors in particular, so you're somebody from the healthcare industry and you really want to see some of these numbers that I'm presenting from the healthcare sector, we do have a set of results, reports that you can look at that show those results. So in fact, there are three sets of results that show up in these reports. One is the Highlights and Insights reports, which looks a little bit like what I'm going to present now. The other is a top-line result set of results, which are aggregated across all the industries. And then we take the firm and industry and we break out every single result. So this is like a 300-page document, but what it does is it tells you exactly what marketing spending looks like or what analytics spending looks like in a particular sector. So you can find all of those up on the CMO survey website. I encourage you to go ahead and look in particular at those. So what I want to do is go through a few highlights with you related to macroeconomy. We'll look at some of the shifts that have occurred in marketing in the pandemic era that we're living in. We'll look at spending, marketing leadership issues, and that's where we'll get into some of the political and social issues, marketing jobs, and then finally marketing analytics. There are a lot of other topics contained in the results, but because we only have a half hour together today, I picked off a few things that I thought you might find most interesting. So just in terms of the macroeconomic shifts, I wanted to show this just to put the rest of this discussion into perspective, which is that we saw in the most recent survey, which was collected in January, we published the results first at the end of February, that marketer optimism really shifted upward. So see where it was in June of 2020 here, really at close to the sort of Great Recession levels at 50.9, and then we see it shoot up almost to record levels at 66.3. And so, we do see this jig-jag over time, but nevertheless, this is a big lift. It shows that marketing, marketers are in fact optimistic about the economy. I think we see this coming from other functions as well. And it really is very consistent with a lot of the results that I'm going to show you. And in the same way, we've been tracking the percentage of firm sales through the internet, again, really for a long time. And what you can see is that between February of 2020 and in this past February 2021, we see a big leap up. Most of that leap occurred in the summer when we ran a special edition of the CMO survey, but nevertheless, it's being maintained. Firms are selling a much greater proportion of their products and services over the internet, in part because they have to. But what I'm going to suggest to you, and you've probably heard from others, is that this will be the way forward, and we're seeing basically this digital transformation that we want to focus on during the talk. So this is a big deal. Those numbers, as you can see, they were hovering really very modestly over time, but then they really sprang up. So just thinking about what happened to marketing during the pandemic, there were a couple of key trends that I want to identify for you. The first is that when we ask marketers, we've asked this question again over the years to tell us what their customers' top priority is, and in this case, over the next year, so more in a forward-looking sense. What you can see is that customer experience really rose to the top. It's not that product quality is unimportant. In fact, it competes very well for second place. But that customer experience really it is the most important factor, the priority that marketers believe customers are emphasizing. And so that's when we think about and we talk about then coming to market digitally and creating that customer experience digitally, we see the opportunity and the challenge for marketers, how to do that. And so let's move on and I'll talk with you about some of the ways in which marketers are doing that. But this is, you know, really a shift. And it's the first time that we've asked this point about customer experience, and it took first place quickly. So I think there's really important news here for marketers to think about how to craft that experience, how to deliver that experience. So when we asked marketers what they were focused on during this past year, during this pandemic year, what you can see here is that and I'm showing you both the June results and the February 21 results, which reveal that both building brand and retaining customers are the most important factors that marketers are emphasizing. But what you can also see is that building brand value and retaining customers dropped off from the very, very high levels that we witnessed in June. And in place of that, we see a rise in acquiring new customers, which is this 14 up to 20.8, and improving marketing ROI. So when I look at these results, I think my inference is that marketers moved from sort of defense, which was, you know, really holding on to what they had, retaining their current customers, building the brand to be able to communicate with customers, to then going more on the offense and thinking about acquiring new customers, and finally, ultimately making money. And these results are very consistent with what we see in other places in the survey as well. And you see some of the sector level results that I'm showing you over on the right side of the screen. If you're interested in any one particular sector, they do vary. So I'm showing you the averages on the main part of the page there. So when we asked marketers to reflect on the question of considering marketing opportunities, what activities have you shifted resources to during the pandemic? The biggest and the most common investment, hang on just a second, I didn't mean to slip ahead. The most common investment was building customer-facing digital interfaces, very consistent with the focus on delivering that customer experience that we talked about earlier, also the restrictions that made it necessary for marketers to do that. So that was very high already in June at 60.8. We see that rising up to 73.6. So big lift there. And then also, what I also demarcated here, and you can look at the other results, but I demarcated a couple of other key factors here with stars that focus on more of that digital infrastructure that companies made big investments in. So we see a big lift, for example, in improving data integration to allow for end-to-end customer tracking. That almost doubles, right? And so that means companies are kind of getting into that back-end infrastructure to really optimize what they're able to do with customers. Same thing with investing in automation technologies to improve virtual communication with customers. So big lifts there. And so the pandemic has shifted the resources that companies are spending on various activities towards these both basic things like the digital interface and transforming the go-to-market business model, which was second, but also some of the back-end issues that I've just pointed out. So speaking of digital, we asked marketers by what % has the contribution of digital marketing to your company's performance changed in the last year? And what you can see there is that marketers report about a third, 33% average increase in that contribution, which is a really large number. So think about anything that you would invest in. Would you expect within a year to see a lift at that level of improvement in terms of contribution to firm performance? So, and again, it varies a little bit by companies in terms of their internet sales, number of employees and revenue, and then some of the sector differences that we had been identifying. But overall, this is a very healthy number. And then finally, if you think about now putting this back kind of in the marketing functions viewing it from their perspective. I think what these results show, which is the response to the question, has the role of marketing changed in your company during the last year? And how has it changed? And what we see is that 72.2% say that it has increased marketing's role within the company, increased the importance of marketing's role, which again is a huge increase. Again, if you think about it, that this is where marketing could contribute. Marketing was placed in a very important role in thinking about the customer experience, transforming things digitally, leading with a perspective on, well, how can we create value, deliver that value for customers online in ways that for many companies they weren't doing in the past. And so marketing has really benefited from this shift in terms of the role that it can play. And I think strategically as well, that because marketers have something to say about growth, they were able finally to have an opportunity to really say that and contribute. So let's look quickly at some spending and performance metrics. These are all things that I thought you might just like to see in terms of what actually happened with marketing spending. Again, the specifics you'll see, or broken out by sector, you'll see in some of the other reports. So marketing spending in the last year did drop 3.9%. All budgets dropped. Marketing budgets dropped as well. So that was over the last year, we saw that drop off. And at the same time, what we see is that the expectation that it will rise up to 10%, it will change 10% in the next 12 months, so the next year. So big drop off in this year, major increase then looking forward. And some sectors, if you look over here on this, in this smaller box here, you can see that some sectors had a very negative drop off. So B2C services, for example, but B2B products or B2C products did not. And so, the ebbs and flows and the winners and losers, so to speak, of these different industries is definitely something that we see with these results. Digital marketing, we've talked about the importance of that. And what we see here is, despite the massive drop off in marketing spending, we see an 11.5% average increase in digital spend in companies. So overall marketing dropped off, but the percent that was occupied by digital increased quite a bit in these companies. And then one number I like to show, because it's also very comparable across industries, is to look at basically marketing expenses as a percent of overall firm budget, which is the orange line, and marketing expenses as a percent of overall firm revenues. So these are both numbers that can allow you as a marketer to benchmark where you are. But they show this kind of consistent, growth. The percent of budget, that one has dropped off this year, but overall we've seen a decent growth in that over time. Certainly as a percent of revenue, marketing has grown, in part probably because the denominator, the revenue in other words, has dropped off. And then just kind of putting the profit in sales performance levels up here on the screen. What we see is that in June, when we took the first read on this during the pandemic, we saw this really very large drop off. Companies overall, on average, were suffering. Not all, but you could see B2C wasn't suffering, B2C product wasn't suffering as much. But then now what we've seen is that mostly that's, companies have regained their footing. So sales revenue pretty much flat for the following year, and then profits on the rise. Okay, so let's look at some marketing leadership. You might have some questions here. Happy to take those. Of course, with marketing playing this enhanced role and companies overall just trying to figure out what to do during the pandemic, we have on top of that, all of the things that have happened around George Floyd and Black Lives Matter, the presidential election. So a lot happening where companies were often in a position where they could, or some may say even should, have taken a stand on particular issues. So we tried to track that with some of the questions that we asked. So for example, one of the questions that we asked was around DE&I spending, so diversity, equity, and inclusion spending. So by what percent has marketing spending on DE&I in your company changed in the last year? And so what you see is that an 8.9% sample average increase. So it's maybe hard to put that in perspective, but one way that I think is meaningful to do so is remember that marketing spending overall in the last year dropped by 3.9%, a negative growth rate, right? And so the fact that DE&I spending went up in the face of that drop is frankly remarkable. And so that's something I think that is actually commendable in terms of really getting behind DE&I. You can see that, hang on, my screen keeps shifting and I'm not sure why there. You can see that that larger companies, which are the companies at the top of the number of employees and revenues, they did more of it. They spent more on average, as did companies that sell more of their products and services over the internet. And some sectors like B2C product did a whole lot more of this than the other sectors. But overall, I think that this is a pretty big lift. So how did marketers do with this spending? What changed? Did anything change within their companies? That was where the question we asked them next, which is relative to a year ago, rate the success your company had in improving DE&I. And what you can see is that the biggest shifts were up here in terms of what I would call more external facing things, or communications from the company, brand, thinking about how to communicate your brand so that it's sensitive to DE&I issues. And then things sort of fall off from there. So more of the internal around human capital issues with training or acquiring and retaining employees, which you could put under that marketing employees bucket, drop off from there. And then drop off even further when we think about more strategic marketing issues like which customers do we segment? Which segments do we go after? How do we target these customers? What partnerships do we elect to work with? Do we make a decision to use DE&I criteria when selecting partners? And then formulating our product and service design, which can often be really necessary when you're talking about people of color. They may have different both needs and preferences around products and services that may be, from these numbers, look like they're not being dealt with as comprehensively as, say, just communications and brand. And so this, I think, is a little bit less encouraging because it says the emphasis is probably more on the external facing than the internal facing. And then when we ask marketers to rate the degree to which your company has developed an inclusive approach to marketing decision-making, meaning you've established steps to review and or evaluate marketing decisions from a DE&I perspective, you can see that the sample is really split. So this is a 7-point scale where 7 is very highly and 1 is not at all. So 19.4% aren't doing anything. Only 7% say they're doing it a lot, or excuse me, 5.6% are saying they're doing it a lot. And then everybody else is sort of scattered on either side of that mean, and the mean is below the average. And so, so again, this would be an opportunity, I would say, for marketers to think about putting together a process for vetting their decisions using DE&I criteria. Taking a stance on politically charged issues, this is something that we see a lot of discussion about in the press, and we've been tracking it for a while. We see actually the largest percentage, 27.7% of marketers say that they think it's appropriate for their brands to take a stance on politically charged issues. Still a pretty small number, but nevertheless, it is a number that, that is rising. We saw also a lift in one earlier period as well. So let's look at, we asked them specifically to identify some of the social issues that they were willing to get behind. So we asked specifically, has your brand taken public action for or against any of the following social issues? The sort of apple pie, vanilla, easy one was the COVID-19 safeguards. So companies were happy to get behind that. The majority of them did. The second highest category is racial equality at 59.4%. Things drop off pretty severely at that point, including gender equality, even climate, healthcare, economic equality, education, immigration, et cetera. So still kind of a wide disparity between the things that were easy for companies to do, which is COVID-19, and those that follow. And when we look specifically, I thought this was interesting, so I wanted to share it. When we ask, looking at this from a sector perspective, what you can see is that some sectors really soar on these things, but for the most part, sectors tend to sort of line up where their businesses are. So for example, energy companies take a stance on climate issues. Healthcare companies take a stand on healthcare issues. Education companies take a stance on education issues. Economic equality, banking, and finance takes a stance. So there are differences. They look like they tend to make sense from a strategy and corporate strategy perspective as well. And then finally, I would love to get your comments on this, why you think this result looks the way that it does. So we're coming off the election, and we just thought it would be interesting. And there's so much divisiveness around, the presidential election, all of the things going on in our country. So we asked, to what extent are or were your company's marketing activities used to encourage national unity, which a priori, meaning before the survey, we thought that it would look a lot like COVID-19. It would be like, this is something that we can get behind, it's easy. But what you can see here is that 57.4% of companies said that they would not do that at all. We're trying to figure out why. We've done some surveying with our own MBA students and with consumers, but would love to have your comments on why you think that's the case. Why do marketers want to stay out of the ring on this one? What's the challenge here? Why not jump in and take a stand on this? What's the challenge there? Why not do it? So we can have a debate about that, and I'll show you a few more results to finish up here. Lastly, on the leadership issue, just looking at transparency, we can see, we asked them to rate the extent to which they believe their company is transparent with customers about the following topics. Not a lot of transparency, as you can see. Data collection and data usage were the highest, but they're all below the 50% mark. So fewer than 50% of the respondents in our sample said that they were transparent with their customers about these types of things. So again, opportunities here. Potentially to really stand out. We know there are companies, for example, like Everlane, for example, really focuses on what they call radical transparency as a way to really define their business model and their strategy. So still more opportunity here. Okay, I think what I might do is see if there are any questions. I'll stop here, and if not, I can come back and show you a little bit more on jobs. So how about any questions from you guys? Okay, then let me show you a few more results here. So marketing jobs. So we talked about the opportunity for marketing in this era. And so, but of course, marketing did also suffer job losses because companies just really had to cut back on payroll and things. So what we see is that across the sample, a loss of 8.2% of marketing jobs were lost. 28% of those were senior managers, which is a number that's bigger than I expected. When we dropped that question at the last minute to see if, whether these were new employees or well-established employees. So there's a little bit of a dynamic going on here that I'll return to, but we think there was some mixing of, some people were being hired and some people were being let go. So, but just on this letting go point, so we see this drop off. And when we asked marketers to tell us, when these lost jobs would return, what we see is that in June, that number, the highest number, was out here at never. So 24% were saying never. That decreased considerably. So here in February, when we asked the same question, now we see 40.2% saying 1 to 2 years. Yeah. So let me show you this, and then I'll come back to Al is asking a question about the national unity. So let me just show you this, these few more slides on on jobs, which is that 9.1% of jobs were added. So jobs were lost, jobs were added, and 17.7% of those were senior managers. So if we go back just kind of quickly, we can see that some sectors lost a lot. So B2C services lost a lot. All sectors lost something. But at least in terms of these four categories, some like healthcare, for example, energy didn't lose any marketers. But if we look over here now in terms of the gains, some sectors really gained. Okay, and some sectors had both losses and gains, which is going to lead me to suggest to you that, in fact, there was some shifting of the types of people that were being employed. So, for example, maybe some senior managers were let go who didn't have the kind of skills that were needed around digital or data analytics, things that the company was finding it needed as it was building that infrastructure and using those things. And that goes a little bit to, let me just show you this. Then there's the overall net job change in terms of sector winners and losers. So some sectors did end up losing more than gaining, but overall it was pretty flat. So there was some mixing and then some, some sector winners and some sector losers. But the prospects are good, very, very good in terms of, people see that, in the next year, they expect marketers to hire at a very high clip here. So by what percentage will your firm's marketing hires change in the next year? Okay, so let me engage. I see a few of you jumping in on these questions about national unity. So Al Sanchez, one of our alums, says his hypothesis around why they answered so weakly in terms of wanting to get behind the national unity is that it's not really clear what that means. I think that's right. We left it vague so that people could think a little bit more about that from their perspective, but you're right. So maybe your prediction would be if we had said something more about bringing political divisions together or bringing racial divisions together, that would have helped perhaps. So Dave Torgerson, hi Dave, is saying that I saw the political discussion in the workplace drop off dramatically leading up to and during the recent political season. Wonder if that mentality is influencing marketing decisions. So you're absolutely right, Dave. So in a question I didn't share with you, we asked, what are some of the political actions that you are comfortable with? And we had asked this question maybe 2 or 3 years ago. And one of the questions that we asked about was around allowing employees to speak out on political issues. That number was like at 57% a couple of years ago. It dropped like to the 20s or 30s. So a really big shift in how comfortable companies are with allowing their employees to speak out on political issues. And since then, I've done a lot of reading, just like what you're suggesting, which is that this caused a lot of disturbance, I guess, in a lot of workplaces, and people, it really got shut down. And so I think it may have also been, like you're saying, it may have repercussions then for how much companies are willing to do on the outside. Luana, one of our alums, is saying that her hypothesis that they would be afraid of losing the customer if they take a position. That's absolutely right. I think that's the biggest risk. Or they don't believe it's the job to be done for that brand. That's right. So they could say, look, we're really not in this business. Maybe Nike can do it because, they just do it, but we're not, we're a B2B medical supplier. Why are we in the business of talking about national unity? The question I have is it possible to talk about national unity in a way where you really get behind the country and not any specific topic, where you get behind, like we're all in this together, we need to, work together, more this kind of very civil approach to problem solving as opposed to kind of what's going on now, which is the back and forth. And then maybe one final comment from David. So do companies run the risk of jumping in too quickly on these socially divisive and politically charged issues? Absolutely. He's mentioning specifically the position taken by MLB with regard to the new voting laws and moving the All-Star game to Denver. So I think this is always the risk. Do you sit back and wait? Do you take a stand? And we've seen over the last year, we've seen a lot of companies basically stick their neck out on things. And even from gun control, going back and looking at Dix and Delta and a lot of companies that did that. But there are these risks. This is where I think you have to know your customer and you have to know how to handle things very effectively. There's a lot of nice research that's happening on this topic. So, well, hey, thanks for all of your questions. Let me just point to one final thing before we take you to my final slide here. For those of you that aren't signed up, would love to have any of you that are marketers or know of lead marketers within your company that aren't participating in the CMO survey yet. Would love to have you sign up. You can do so by, it says sign up here, but just go to the CMO survey website and look for the participate link, and then you can just sign up there. And then when we do the survey this summer, you'll be a part of the survey. So that would be super helpful because we're always encouraging people to participate. And then lastly, just to let you know that next Wednesday, at the same time at 12:30, my colleague, Professor Cam Harvey, who many of you know, I'm sure, will be talking about the effect of inflation, an inflation surge, what that might mean for companies and the economy. So stay tuned, or join him for that session. And thank you all for participating today. I really appreciate your input and hope to see you back on campus soon. Take care.